CarMax reported a big earnings miss earlier last week as vehicle sales fell short of estimates. And that ugly report sheds light on how rising interest rates are beginning to hurt the used car market. That's where we find Sozzi's take for today. Those financing costs are going up.
Yeah, and in some cases, they're just absolutely shocking. But, of course, it was almost a week ago we got that CarMax report, and the stock was absolutely slaughtered. I just don't want folks to forget about that because we're going into earnings season coming up. We're going to get results from a Carvana and an AutoNation. And that CarMax report, I think, was very disturbing. So let's pull out some stats here. And we're getting a lot of weakness in the used car market. And a lot of this data comes from Manheim, noting that wholesale used vehicle prices fell 2.3% from August in the first 15 days of September. So prices are really starting to come down here, as I think a lot of would-be buyers are balking at some of the interest rates they're getting on these loans, in many cases above 7%. Price declines, according to the Manheim Index, the steepest in full-size and sports cars, some of the higher priced offerings here. And we have that Manheim chart too. Now, of course, we saw a big spike in used car vehicle prices around the pandemic as everybody needed a car. They wanted a car. They were out there traveling more. They were doing staycations or just staying home. Now, they also, when they started to return to the office, they went out there and bought cars. They didn't want to take public transportation. But now all those dynamics, I would argue, are no longer in play at the extent they were. Now we're seeing prices come down alongside of a slowing economy. Now, the losers from this slowdown in the used vehicle market are some of the names you see on the screen. Of course, CarMax, with this very ugly report. AutoNation is pretty much the same as CarMax in terms of business model. Carvana, an online-focused retailer of used vehicles. And then you have Hertz and Avis. Now, why did I include them in here? Because a lot of times their stocks trade off the perceived value of the inventory or the car inventory that Hertz and Avis own. So if those car prices are coming down, that's less of a valuation or less value assigned to the Hertz and Avis budget rental fleets or their inventories. Overall, a good quote here, so I'll just add two, from Adam Jonas at Morgan Stanley, noting CarMax might be first on in feeling the impact of the used car decline, but we expect the entire auto retail franchise and auto credit complex to follow. So something to keep in mind from Adam. My take is this: auto retail stocks are probably dead money for right now. I know I look very happy there. I'm getting ready to go out for a cruise with my sunglasses on, but still, it's going to be hard to find positive catalysts for some of these names in the coming months.
It's really interesting on especially the used car side. When we think about the rental parts of that business that you mentioned too, I almost bought my first car from Enterprise actually because I hadn't known, and there are a lot of people out there that take advantage of this after they do find out that a Hertz, that an Avis, that an Enterprise, that they actually do sell used cars because sometimes they're just trying to work through old inventory that they have in order to get newer vehicles that are going to be able to be rented out and have better maintenance cycles over a longer period of time, knowing how many times those keys are changing hands too.
Did you buy it?
I didn't, no.
Buy it?
No.
How many miles did it have? Like 300,000?
Oh, they have a lot of miles.
A lot of miles.
Yeah, some of them as low as 18,000 miles, and then some of them you're getting up into the hundreds of thousands, 100,000 miles. You're like, I don't need that.
Maybe not.